Hello friends, welcome to Business Hologram YouTube channel. Today we are reviewing the company Timex Group India Limited. So let's get straight into the company overview part. Timex Group India Limited is a prominent player in the Indian watch manufacturing and retail industry. It is a subsidiary of the global Timex Group. It leverages international design expertise and manufacturing capabilities to cater to the Indian market. So if we look at the other corporate snapshots, it was incorporated in October 4, 1988. Its headquarters is in Noida, Uttar Pradesh. Parent entity was formerly known as Timex Group B.V. It's currently known as the Tanager Group B.V. So it's listed in BSE. And if we look at the stock price, current stock price of the company, it stands at 335 rupees. Market capitalization of the company is 3,515 crores, which falls into the small cap segment. Next, if we analyze the 52-week range stock price of the company, the highest price reached in the last 52 weeks is 421 rupees, and the lowest price reached is 156 rupees. Now let's see the core business profile of the company. The primary activities of the company include designing, manufacturing, marketing and trading of timepieces and jewelry, along with providing after-sales service. Then if we look at the strategic role, beyond its commercial operations, the Indian entity also provides information and technology support services to other global group companies. Key brands of the group are the company's portfolio in India primarily features Timex, Helix and TMX. Now let's look at the financial performance of the company for the last 4 quarters. As you can see in the screen, the revenue, net profit and earnings per share values of the last 4 quarters are listed there. The key takeaways from the figure are first is quarterly volatility. Revenue and profitability exhibited notable fluctuations, with the quarter ended September 2025 marking a significant peak in both top line revenue and bottom line profit, followed by a moderation in December 2025 quarter. Next point that we can derive from the above data is year-on-year context. Despite quarter-on-quarter variations, the company demonstrated year-on-year growth in the December 2025 quarter, with revenue increasing by 25.7% and net profit by 64.9% compared to the same period in the previous year. Next point is operating efficiency. The company's focus on maintaining control over expenses and optimizing operational margins remains a key factor for investors to monitor in the upcoming quarters. Now let's look at the strategic initiatives of the company. Timex Group India Limited is currently executing a multifaceted business transformation under the leadership of Managing Director Deepak Chabra. The strategy pivots from a historical asset-light approach to a more aggressive consumer-facing retail expansion model. So, some of the key strategic initiatives of the company are discussed below. First is retail network expansion. That is the retail offensive strategy. The goal is scaling exclusive retail presence from approximately 45 stores to 300 plus stores. The method they are adopting is expansion is primarily being driven through franchise-led models for Timex World and Just Watches formats. This helps balance the company's established vast distributor network, that is nearly 2,000 retailers, with direct brand controlled customer experiences. Next point, next strategic initiative they are adopting is aggressive premiumization. So the focus is leveraging luxury and fashion licensed brands like Versace and Guess to drive higher margins. So the portfolio they're focusing is continued expansion of new collections, including the first ever Guess automatic watches in India and the Aston Martin luxury watch collaboration, which blends Formula One heritage with high performance design. So the next strategic initiative is omni-channel and quick commerce integration. So the strategy they are adopting is strengthening presence in high growth digital channels. So the execution method they are focusing is Beyond traditional e-commerce, the company is deepening its footprint in quick commerce through strategic partnership with players like Zepto, Swiggy, Instamart, and Flipkart Minutes, ensuring high accessibility for its core product ranges. So the next strategic initiative is market positioning and brand storytelling. So frequent collaborations and the launch of India-led franchises like Vector, Freya target evolving consumer aspirations. So the marketing strategy they are following is high visibility events such as Mysore Fashion Week reinforce brand positioning as a lifestyle leader rather than just a traditional watch manufacturer. Now let's look at the ownership structure of the company. As you can see, the promoters hold 51% of the shares, retail public investors hold 47.17, foreign institutional investors hold 1.32, and domestic institutional investors hold 0.51. So, key takeaways from this data is that the promoter control, that is the majority stake of 51%, is held by the Timex Group Luxury Watches B.V, which is a subsidiary of the Netherlands-based Timex Group B.V. This ensures that the global parent organization retains strategic control over the Indian entity's direction and operations. So the next point that we can derive from the data is public participation. Nearly half of the company, that is 47%, is held by retail or public shareholders, indicating a significant base of individual investors involved in the stock. Next is institutional interest. While institutional interest, that is FII and DII combined, currently stands at less than 2%, it represents a diversified group of investors monitoring the company's retail expansion and financial performance. Now let's analyze the financial ratios of the company. First, we will begin with profitability ratios. As you can see in the screen, the EBITDA margin of the company stands at 13.2%, where the industry benchmark is 12 to 16%. So the value of the company is aligned with the industry standards. Next is net profit margin. The company's value stands at 7.8%, where the industry benchmark is 5 to 10%. So in that aspect also, the company is maintaining a healthy figure. Next is return on equity. The company's value is 65.4. Where the industry benchmark is just 15 to 25%. So the company maintains a very superior position in that aspect of return on equity. Next is the return on capital employed. If you look at the company's value stands at 46.7, where the industry average is just 15 to 25%. So in this aspect also, in this return on capital employed aspect also, the company maintains a superior position. Now let's look at the major leverage ratios. First is debt to equity ratio. The company's value stands at 0.4, where the industry average is 0.521. We can say that the status of the company is in a strong position, or the risk is low. Next, if we look at the interest coverage ratio, the company maintains a value 12.59, where the industry average is 528. So in this aspect also, the company is maintaining a strong foothold. Now let's look at the valuation ratios of the company. First is price to earnings ratio. The company's value stands at 62.1, where the industry average is 40 to 50. So the status, we can clearly say that it is trading at an expensive position. Next is price to sales ratio. The company's value stands at 4.88, where the industry average is 2.22, 2.5. So in this case also, the company is valued at a higher position. It's having a high premium in this aspect. Next is price to book value. The company's position is 24.8, where the industry average is just 8 to 12. So in the price to book value aspect also, the company is at a higher position. So it's having a higher premium in this respect also. Now let's do a quick SWOT analysis of the company. First, we will focus on the strengths of the company. First point that we are considering is strong brand equity. Legacy brand recognition that provides immediate customer trust in the affordable to mid-range segment. So that point is a great strength of the company. And next point is asset light efficiency. Historically, the company has operated with lean manufacturing and inventory management, resulting in high return on equity and return on capital employed metrics. Next strength is global design and license portfolio, exclusive access to premium international licenses, example Versailles, Guess, Aston Martin, etc. That allows the company to capture higher margins in the accessible luxury segment. So the next point that we are considering is omni-channel distribution, a robust hybrid network blending traditional wholesale with an expanding Timex World and Just Watches exclusive franchising network. Now let's look at the weaknesses faced by the company. First point is narrow brand portfolio. That is a heavy reliance on the core Timex brand. Unlike major competitors like Titan, it lacks a deep multi-brand ecosystem. For example, a separate entry level versus luxury sub brands to capture the entire customer life cycle. Next point is limited pricing power. In the mass market segment, Timex faces high price sensitivity, making it difficult to pass on input cost increases without losing market share. Next point is wholesale margin constraints. While they are expanding direct to consumer strategy, a significant portion of revenue still flows through multi brand dealers, which constrains overall gross margins. Now let's look at some of the opportunities in front of the company. First is the retail offensive strategy. The current strategy to scale from 45 to 300 plus exclusive franchisee stores is a significant pivot intended to gain direct control over customer experience and brand positioning. Next point is premiumization trend. The Indian accessible luxury segment is growing at 23% annually, providing a massive runway for the company's licensed premium collections. Next point is q-commerce penetration. Increasing visibility via platforms like Zepto and Swiggy, Instamart allows Timex to tap into the impulse buy behavior of modern urban consumers. Now let's look at some of the threats likely to be faced by the company. The first threat we have identified is dominant competition. Titan Company remains the overwhelming market leader in scale, retail footprint, and marketing spend, creating a challenging environment for market share growth. Next point is tech-driven substitution. Persistent consumer drift towards smartwatches and multi-purpose mobile devices continue to erode the market share of traditional analog watchmakers. Next point is high valuation risk. The stock currently trades at a significant premium. That is, it has a high PE and PB multiples. Market sentiment is sensitive to any missed growth targets in the 300 store expansion plan, which could lead to significantly alter the price stability. So friends, that was a short analysis of Timex Group India Limited company. So if you have found the video useful, please like, share, subscribe and support. Thank you.